Do you like wasting money? No? Then why don't you have these 8 dividend stocks in your portfolio? These are the stocks that Warren Buffett and his holding company, Berkshire Hathaway, swear by. Some of these he's held for decades. If you want to be like Buffett and have your money make money for you, listen up. First, what is a dividend? A dividend is a payout of earnings to a company's shareholders. The amount, form, and frequency of the dividend is determined by the company's board of directors. They can be paid out as cash or in additional stock. Though it varies, they are often paid out quarterly. Dividend stocks are evaluated according to their dividend yield. This is the stock's annual dividend per share divided by its current share price. This tells you the amount of money the stock's dividend will pay you for every dollar you've invested. What's a good dividend yield? The S&P 500 dividend yield long-term average is 1.84%. Stocks that perform better than that are generally considered good yields, although a stock offering more than 8% yield is actually concerning. After all, the company should be reinvesting in company growth, not just paying out. Not all stocks pay a dividend. When they do, they're called a dividend stock, unsurprisingly. Though dividend stocks are not usually huge compared to an individual share price, when a high-performing stock also awards dividends, it can definitely be worth it. Dividend stocks are a big part of Berkshire Hathaway's strategy, though they don't pay them out on their own stock, BRK.B. In 2022, they received $6.04 billion in dividend income alone. More than half of the stocks in the company's portfolio paid dividends. What are the best performing dividend stocks in Warren Buffett's portfolio? Here are 8 stocks that the Oracle of Omaha and Berkshire Hathaway bought, held, and reaped huge returns. And you can too. Warren Buffett's top pick for dividends is a name you know, Coca-Cola. Coca-Cola stock makes up an impressive 7.4% of Berkshire Hathaway's total portfolio. With a dividend yield of 2.9%, it's easy to see why. Buffett has stuck with his stock through the years. He first started buying Coke stock in 1988, and in just that first year, he purchased 23.4 million shares valued at roughly $1.8 billion. He now owns stock worth $25.5 billion with a compound annual growth rate of 9%, outperforming the market overall. Coca-Cola currently pays out $1.84 per share annually. That means if you buy 1,000 shares today, the Coca-Cola Corporation will pay you $1,840 annually, in addition to the benefit you derive when the stock price goes up over time. The next dividend stock pick is Berkshire Hathaway's second largest holding, coming in second only behind Apple. Bank of America has a great dividend yield, 3.2%. It makes up 8.8% of Berkshire Hathaway's portfolio. They first acquired Bank of America stock in 2017. Buffett has been selling Bank of America recently. He's on record as saying he trusts the banking industry less overall because he doesn't believe the system is set up to appropriately punish those who make poor decisions. But Berkshire Hathaway still owns 12.9% of Bank of America and is their largest institutional shareholder. This is likely because B of A still has strong deposits, which can counter their losses in the long term. Bank of America pays 0.96 per share annually. Warren Buffett's next pick has an even higher dividend yield than either of the big names we've talked about so far. HP has a 3.5% dividend yield and makes up 0.9% of the Berkshire Hathaway portfolio. This is an exciting option because it's a fairly new purchase by Berkshire Hathaway. They first started acquiring HP stock in early 2022. The stock is taking a dip right now, but Buffett is holding on, and other analysts agree that HP has a strong outlook far into the future. The dip simply means it could be a good time to buy if you can wait out the recession while you hold the stock. In the meantime, HP is paying out great dividends. Since Buffett's holding company purchased 121 million shares last year, the dividend yield has been increasing steadily. It's at a healthy spot right now and is likely to hold strong, making this stock a great pick for the patient investor. The next pick is probably one you have on your refrigerator shelf right now, Kraft Heinz. If you've eaten food in North America, you've almost certainly tried Heinz ketchup or Kraft's macaroni and cheese. This company is a master of longevity. Heinz was founded in 1876, and Kraft was founded in 1909. The merger is fairly recent, orchestrated in 2015 by Warren Buffett and others. This is another company who isn't seeing much growth recently in overall stock price. In the past year, they've lost about 1%. However, we're looking at long term for these dividend stocks, and Kraft Heinz has the highest dividend yield we've looked at yet. Their 4% dividend yield means $1.6 paid out per share annually. In fact, Kraft Heinz pays out 40 cents a share every quarter like clockwork. Analysts' opinions vary on this stock. Some say hold, some say buy, but all agree the dividend yield is phenomenal and likely to keep paying out well into the future, even if the stock price is not skyrocketing itself. Warren Buffett trusts the stock enough to make it 3.7% of Berkshire Hathaway's portfolio. He also holds 26.5% of Kraft Heinz stock overall. So far, we've looked at some big names with a lot of security. Warren Buffett and Berkshire Hathaway tend to go for the safest pick with the greatest possibility for good performance over time. But the rest of the list has some names that may surprise you. An outsider might expect that global economic and environmental trends would be hurting oil and gas stocks, but that's not the case. Our next Warren Buffett dividend stock pick has been growing their dividend payout for 36 consecutive years. Chevron has a dividend yield of 3.8%, and it's likely to keep growing. The CFO even told Fortune that the company's dividend is its first financial priority. Chevron has our highest flat annual payout yet, $6.04 per stock per year. It's seen a 7% dip this year, but given that it grew 53% last year, you can consider this top stock on sale at the moment. It's likely to continue growing at a good rate, a good bonus when you consider its high dividend yield. Berkshire Hathaway is confident enough in this stock to make it 8.4% of their portfolio. Our next pick is one you probably haven't heard of, but it's a recent acquisition for Berkshire Hathaway with promising prospects. Louisiana-Pacific is a building products producer likely to grow in 2024 as new home construction takes off. Berkshire Hathaway first purchased Louisiana-Pacific stocks in the third quarter of 2022. In the fourth quarter, they purchased 21% more, increasing their total to 7 million stocks. This stock is a surprise, given the overall weakness in the US housing market, but Warren Buffett clearly seems optimistic, given Berkshire Hathaway's 9.8% ownership stake. It's not a huge part of Berkshire Hathaway's portfolio, only amounting to 0.1% of it, but as far as dividend stocks go, it's a great bet. The dividend yield for this stock is 1.6%, so if you're looking for a stock that's more affordable than some of the giants we've mentioned here, with strong growth prospects despite a challenging market, this is a good option to look into. Louisiana-Pacific has increased its dividend regularly over the past 5 years. Annually, its dividend has grown more than 13%. Here's another surprising pick from a struggling industry, Paramount Global. With a dividend yield of 4.2%, it's certainly attractive. It also has one of the lowest prices per share of any company on our list, giving you a lower barrier of entry to join. Paramount Global is one of only 13 companies where Berkshire Hathaway has over 10% ownership stake, showing Buffett's confidence in the stock, despite it only making up 0.5% of the Berkshire Hathaway portfolio. Despite industry struggles overall due to strikes and increases in streaming expenses, Paramount Global has seen big growth thanks to their streaming platform Paramount+. Recent hits like Top Gun: Maverick, which was the top-grossing film of 2022, lifted total subscribers to 56 million. However, this growth is balanced out by the huge expenses of scaling streaming options. Additionally, Paramount Global recently cut their dividend payout from 5 cents per share to 24 cents per share, so they could use that cash to continue scaling up their streaming program. So why is this a pick for top dividend stock? Because despite the cuts in expenses, analysts are upgrading the price target and rating of this company due to the value of their assets. Bank of America securities analysts say that this is a buy stock with a price of $32, about double the current share price. The situation could change, but people aren't going to stop wanting to watch their favorite shows, so if you can deal with a bit of a roller coaster, this is a good stock to grab and hold on to. If you want something the opposite of risky, you're going to love our last pick. It's been a family favorite for almost a century and a half. Johnson & Johnson rounds out our list with a dividend yield of 3%. Berkshire Hathaway's Johnson & Johnson stake isn't huge at 327,000 shares, worth $48.1 million, but it's been a consistent Warren Buffett holding since 2006. Currently, Johnson & Johnson pays a quarterly dividend of $1.19 per share. We consider them one of the safest picks on our list because they've been growing their dividends consistently for 62 years. That's the kind of stock you want to buy and hold forever. If you're starting to grow your portfolio and wondering why it's so hard to get that first 100K, you're not alone. Many people struggle to hit 6 figures, but some people make it there much faster, and some never make it. Make sure you're one of the few who make it to $100,000. Watch this video to find out what not to do if you want to grow your net worth quickly.